When we talk about Ethereum, we're not just talking about digital cash like Bitcoin. It's more like a whole ecosystem built on a decentralized network that goes way beyond simple transactions.
Yeah, absolutely. It's like a platform for a range of applications, right? From finance to gaming and even art.
Exactly. It's basically the backbone of what many call Web 3.0. It's like a reimagined internet where you can, interact in a decentralized way rather than relying on a
Yeah.
centralized authority.
So, when someone new hears about Ethereum, they might wonder, what exactly are you getting into? It seems like there's a ton of buzz about decentralized applications, or dApps.
Right, right. Ethereum is powered by its native token, Ether, and it does a lot more than just facilitate payments. Think of it as a platform where smart contracts, which are automated if-then rules, run autonomously. Those smart contracts allow developers to create decentralized apps that can range from financial instruments to, say, digital art marketplaces.
Speaking of digital art, NFTs have really exploded recently. So, in a sense, Ethereum is almost like the foundation that supports this vibrant ecosystem, right?
Absolutely. NFTs, for example, are a big deal because they serve as proof of ownership, like you literally own the original version of digital art, kind of like owning the Mona Lisa as opposed to a copy.
Yeah, and it all rides on smart contracts, right? But um, how did Ethereum get started? I remember there was like a really fascinating backstory with Vitalik Buterin and a white paper in 2013.
Oh, for sure. Vitalik Buterin wrote a white paper to address Bitcoin's limitations. Basically, he envisioned a network where dApps could interact under a single unified protocol. It was sort of a shift from being merely digital money to creating a platform where anyone can build on top of it.
Right? And that was before any of the major projects or token sales, wasn't it?
Exactly. Vitalik, along with other co-founders like Gavin Wood and a few others, held a token pre-sale to raise funds, over $18 million in Ether no less. That propelled Ethereum into what it is today, a massive developer community that really values decentralization.
And the idea was to democratize power. So there wasn't a central authority like Apple controlling an app store. Instead, it was governed by community consensus.
Yes, yes. And that's where the concept of decentralized governance comes into play. Remember the DAO? It was this interesting experiment where decisions were made by the community through smart contracts.
Yeah. Oh, the DAO, the infamous hack. That's one of those moments that really tested Ethereum's resilience, wasn't it?
Right, indeed. After an exploit led to a $40 million heist, the community voted to perform a hard fork on Ethereum. This created two networks, one that continued as Ethereum and the other, known as Ethereum Classic, stuck with the original chain. It was a tough call, but showcased the community's ability to adapt in the face of adversity.
Yeah, it shows the strength and also the vulnerability in decentralized systems. You know, it's like having a safety net that sometimes leaves you exposed.
Absolutely. Transitioning from history to the mechanics, let's talk about how Ethereum actually works under the hood. Similar to Bitcoin, it uses a blockchain, a distributed ledger maintained by nodes around the world. These nodes verify transactions and store a copy of the entire blockchain, ensuring that the network is decentralized and secure.
And the miners play a crucial role here, don't they? They validate transactions through a process called proof of work.
Yes, miners use computer power to solve computational puzzles, proving that work has been done in the process. Their efforts secure the network, and as a reward, they receive Ether. It's like an intricate reward system designed to incentivize security and proper operation.
But isn't there a downside to this? I mean, proof of work is pretty energy intensive, isn't it?
Yeah, and that's been one of the major criticisms of Ethereum. The high energy consumption is partly why they're transitioning to Ethereum 2.0, which will shift the network from proof of work to proof of stake. The idea here is that validators who stake a minimum amount of Ether replace miners, and the process becomes much less resource intensive.
So, with proof of stake, instead of solving puzzles, validators are chosen to verify transactions based on the amount they stake. It sounds like less computation is needed, which should lower energy use, right?
Right. It's like instead of running gigantic machines 24/7, you rely on economic incentives. Validators get rewarded for being honest and can lose their stake if they try to cheat the system. This mechanism should also, theoretically, increase security because it's easier for more people to participate without needing super specialized hardware.
Yeah, but here's a point I find interesting. While Ethereum aims to be a whole network for decentralized applications, its scalability and high gas fees still pose challenges for everyday users, don't they?
That's a great point. High gas fees can really hinder small transactions, which becomes especially problematic when you have a surge in network activity. It's a bit like trying to squeeze through a crowded freeway during rush hour. Even though Ethereum's potential is huge, these fees and the current scalability issues mean that at times it's not as user-friendly as one might hope.
And that's where initiatives like sharding come into play, right? How does that work in addressing these issues?
Exactly. Sharding is a technique where the blockchain is split into several smaller, more manageable networks. It's like breaking a giant pizza into slices so that each node only has to process a fraction of the transactions. This should, in theory, decongest the network and improve scalability, making it much easier for more transactions to happen simultaneously.
Right? That definitely sounds promising. And what about the actual user experience, like buying Ethereum? I hear it's not as straightforward as traditional banking, especially with wallet setups and all that.
True. Buying Ethereum involves using a cryptocurrency exchange because you can't just head to a bank and pick it up. You create an account, verify your identity, and then trade fiat for Ether. Many users store their ETH either in the exchange or transfer it to a digital wallet for better security. It can be a bit daunting for beginners, but the ecosystem is gradually becoming more user-friendly.
And on top of that, the decentralized finance applications, or DeFi, built on Ethereum have really taken off, haven't they? They offer everything from lending and borrowing to trading derivatives.
Exactly. DeFi shows how Ethereum isn't just about digital currency. It's about creating a whole new financial system where users control their own assets without intermediaries like banks. This democratization of finance is what really sets Ethereum apart from Bitcoin.
Yeah. Now here's something to consider. While DeFi promises huge benefits, it also brings in a lot of risk and volatility. Not everyone is comfortable with such a radical shift from traditional regulated systems.
That's a very valid critique. There's a delicate balance between innovation and risk. On one hand, you have these incredible tools that could redefine finance, and on the other, you see issues like high fees and potential security vulnerabilities, even with smart contracts. The system is still evolving, and there's a lot of work to be done to make it as accessible and safe as traditional platforms.
Yeah, and it goes to show that despite its potential, Ethereum isn't without its flaws. Accessibility and user experience continue to be areas that need improvement.
Right, and that's why Ethereum 2.0 is so crucial. It's not just about reducing energy use, but also about making the network more scalable, secure, and user-friendly. With features like proof of stake and sharding, the goal is to overcome these limitations and support a massive global user base without breaking the bank on transaction fees.
It sounds like Ethereum is on a fascinating journey, transforming from a promising yet hackneyed idea to a driving force behind the next evolution of the internet.
Absolutely. It's a constant evolution. From its origins addressing Bitcoin's limitations, through tough challenges like the DAO hack to the promise of Ethereum 2.0, the project has always been about innovation and community power.
Yeah, and while there remains a lot of uncertainty and risk, it seems hard to ignore the potential for revolutionizing how we handle everything from finance to art and beyond.
Exactly. It's like watching a caterpillar transforming into a butterfly. Sure, there are challenges along the way, but the promise of a more decentralized, user-empowered digital future is truly compelling.
Well, this definitely gives us a lot to think about. Ethereum isn't just about a token. It's about an entire ecosystem that could redefine the internet as we know it.
For sure. And as more developers, users, and even big companies start to see the benefits, whether it's reducing censorship, fostering creativity through NFTs, or enabling decentralized finance, they're really hinting at an exciting future.
Right? Absolutely. And while we critically note the issues like scalability and fees, it's clear that Ethereum is constantly evolving to meet those challenges. It's kind of like in a constant state of improvement, adapting to a fast-changing digital landscape.
Exactly. And that evolution is something we need to watch closely. Whether you're a developer, an investor, or just a curious user, understanding how Ethereum works and where it's headed is crucial for staying ahead in this digital age.
Well, it's been a really engaging talk. Ethereum is definitely more than just a cryptocurrency. It's the foundation of a whole new way of interacting with technology and finance.
Absolutely. And the journey is just beginning. Thanks for the chat, and here's to watching Ethereum continue to innovate and evolve into the future.
Yeah,